sound like a full stadium, so thanks for joining everyone, good afternoon. My name is Don Kinsel. For some of the new faces that I see here in the room, and very much welcome to the Holland Fintech Meetup of June. We've been moving around a bit, as you might understand. It's a really busy month for events. Last week we had Money 2020, this week we got TNW starting tomorrow, or actually also already tonight to a certain extent. So it's a really busy period for all tech entrepreneurs, so it's pretty hard to actually get a crowd together. So I think it's really nice to get you all here to actually talk a little bit about what's happening in fintech space and what's happening especially with the focus on personal finance management, wealth management and pensions. We've got a really nice select crew for you today on stage. Besides, of course, our kind host AWS, where Marcel van Eyck will tell us a little bit about in a minute. We'll actually do a little bit of a fintech update, or what you're used to, that I actually go through the news of the past month to give you an oversight of the most important feats. I'll also dive in a little bit in some of the conclusions we drew from the personal finance and wealth management field. Then we'll get a presentation by Wout van Brevoort from Rabobank on whether banks actually have a future in the world of finance. Definitely an interesting question to ask. Then we'll do a brief Kahoot quiz, we'll always try to make acquiring knowledge about fintech a bit fun. Erik Tergoningen from SnipTech will then tell us about his company. He's been working on that for quite a while now and curious to hear where he's up to. And Adam Klinker from Flow Your Money will tell us more about what Flow is up to these days. And then we'll close it off here. We'd like to ask you to vote for the best presentation of today. So after his presentation, I'll ask you to bring up your phone, scan the QR code, and give us a rating of how you think the presenter did, because to stimulate everyone to do their utmost best. And of course, then after closing off, we'd like to bring you all together to have a drink and talk about everything that we've really discussed, and perhaps everything nice that's coming up. That said, I think it might be good to ask Marcel to come forward. Let's see if I can.
Good afternoon, everyone.
You want this one? Yeah.
How many of you use AWS? Right, so I don't need to do a whole explanation of what we do. First of all, welcome. This is where the magic happens. And we have around 700 people of AWS in the Netherlands, and most of them are based here. So, does anyone have any questions about AWS, or do you want to know anything specific?
Maybe I can ask a question.
Yes, sure.
Because what I'm curious about, maybe for people that are not using AWS yet, you have a really nice startup program, right?
Yeah,
a really nice startup program. So
yes.
For people to get started with AWS, what would be the best way to get access to that?
Ask me.
Okay, that's a good start.
So we have investment programs for startups, and you get a particular amount of money to help you. But also support from people that work with startups the whole day.
Okay, great. So if people can talk to you after the presentations, perhaps to get access to that.
Yeah, we haven't told the secret yet, so the drinks are up on the rooftop. So that's a very nice place.
Definitely.
So I hope you stay till the end.
Yeah, that's indeed a good invitation. Well, thank you very much, Marcia. I think that's a good way to make sure that everyone at least gets access to, for example, the startup program. And thanks again for hosting us here so kindly.
You're welcome.
Let's give a big hand for Alright, then so what I'll do now is actually go a little bit through first of all, why we actually do these kind of events. But just for a few new faces, Holland Fintech is an association of companies that are active in financial services and technology. So what we're trying to do is actually look at the changing landscape of financial services and try to bring everyone together to together understand where it's heading and to look at business opportunities or collaboration possibilities within that. We think that it's really important that, for example, events like these are happening for knowledge sharing. So on one hand, we can enlarge the network, we can help everyone engage with each other and find business opportunities within each other. So that's the whole purpose. Should you have any questions about that, want to get access to a part of the market, get an understanding of what's happening or anything else, please do talk to any one of our members of our team to get access to that. Now, for basically what happened in May, Generally, we write a newsletter every Friday that covers the global highlights of fintech news. And I'd like to tell you a little bit about the things that we saw, especially in May. Should you want to be, of course, on top of the news, we definitely recommend you to subscribe. Generally, what do we see? The European Banking Authority was pretty worried about stablecoins. We've seen, of course, that since all the enormous volatility in the crypto market over the past year, everything around crypto has become really tense, especially from a regulatory perspective. And so they're looking into creating special rules for stablecoins at the moment. It's quite interesting because we actually see some parties about to launch regulated stablecoins already in the European market. But it's a really tense space where you especially see as well that there's a sort of a conflict with plans for a digital euro. Right? So the European Committee and the ECB want to launch a digital euro, which is to a certain extent as well to actually make other stablecoins obsolete. But then again, at the same time, they can't really forbid that, so that remains a bit of a tension point. Curious to see how that will go. We're expecting actually this summer for some new papers to come out that give more explanation about what the plans for the digital euro are actually going to look like. So that's probably also one of the interesting things you want to keep track of. One of the things also related to cryptocurrencies is that there's the sense that there's a lot of possibilities still to avoid money laundering screening. So they're now actually looking at making it mandatory for everyone to screen that. I think in a lot of regulations, a lot of jurisdictions, like for example in the Netherlands, all crypto firms that are already registered with the Dutch Central Bank are already obliged to do screening for money laundering. But not all jurisdictions in Europe were equally equipped like that. And especially what we saw is that there was a lot of discussions also in the Dutch market on whether these rules would apply for foreign investment, foreign cryptocurrency platforms. Think about Binance, for example, that seem to be avoiding a lot of the regulations that we're applying here, but we're still serving Dutch customers, creating a bit of an uneven playing field. So it's actually, EU is really pushing forward now for central rules, which I think will hopefully also take some of the debates that we've seen in the Dutch market between the Dutch Central Bank and some of the crypto parties out there. For example, if we actually jump then to Lightbit, which is kind of related to this, Lightbit ceased operations recently. They just weren't able to make it work. They had a very strong big loss over the past year, and half of that loss was actually created by regulatory costs. So especially keeping up the registrations at the Dutch Central Bank and all the compliance costs they had to make made up a really big portion of their operational losses, which they could not sustain, especially due to also reduction in revenue because of market conditions. So since cryptocurrency became much less valuable over the past year, or at least very much volatile, we saw that less people were interested in trading cryptocurrencies or investing in them, and that puts a big burden on the top line of cryptocurrency trading firms like Lightbit. In this case, they actually said, okay, we'll stop operations, so we'll fold the company, but we allow the customers to actually get across to Bitfavo, one of the largest trading platforms in the Dutch market. Quite nice actually that they were able to do that, probably also in good conversation with the Dutch Central Bank, who also looks after these kind of stores of value. Well, interesting thing, of course, where everyone that comes by almost every month is ChatGPT, OpenAI, ChatGPT, and conversational AI or generative AI. They tend to be in the news every month these days. There's a lot, very big hype around it, and I think it's also, especially due to the fact that there's so many people now can sort of imagine what AI can do, where before it used to be very theoretical and mathematical oriented. You see now it becomes much more tangible for regular consumers to actually think what it can do. That sparks a whole hype, which we always need to be a bit careful with. But then again, it's also interesting to follow and see what's really going on. In this case, the biggest news was that ChatGPT was launched as an app for iPhone, and expected also to launch more apps for multiple users of the conversational chatbot. On the big tech firm, big tech side, Meta had a big fine by the European Privacy Authority for actually transferring data to the US. Definitely also an interesting one. I think this is where you see that in the financial industry, there's a big, probably also AWS can talk to you about that there's a really big demand for actually servers in the EU instead of servers in the US where software is run. So all major players have a system now where they can actually have Chinese walls between all the data points. See, where are we? See if we can get it back up. Oh, yeah. All right. Yeah, can you find it? Okay, so what we see is that because there's a real sensitivity with regard to European data being transferred to the US, you see now that Facebook apparently or Meta was not able to do that properly. So that was one of the worries that they had. Yeah. Okay, perhaps with it. All right. What was the next one? Oh, yeah. One of the things that was also a bit of a surprise, I think, well, not for everyone a surprise, is that Revolut didn't get their banking license in the UK that they had applied for over the past month. I think Revolut is very often seen as one of the more successful neobanks in Europe. Very wide range, but they've been struggling a bit with their license, starting out first in Lithuania, and they've really been trying to copy their banking license towards the UK, but it's been refused by the banking authority there. Which is, I think, quite a big setback for them. At the same time, we also saw that quite some important staff members, like the CFO, for example, were leaving the company. So there's quite some worry about the status of Revolut internally at this point. It's not like, yeah.
Is there a reason for the decline? Is that known or?
No, because of course also the Bank of England is not allowed to say something about that. So there's a lot of speculation going on around that. We do know as well that they struggle to get their figures in order over the past years, so it's taking them quite a while to publish their figures. I think there's a lot. Let's say there seems to be a bit of internal struggle as well with some key people leaving. So it could be that some things are not completely in order there. I'm not sure if we're heading towards the next Wirecard kind of thing. I don't think so, because that would be quite a surprise if people after Wirecard actually were still so bad in paying attention and trying to find the money that's on the balance sheet. But you never know, right? It's just good to be careful there, I think. Let's see, what else? Oh yeah, there indeed on the last one, I think is, I already mentioned the digital euro briefly. It's a project that the ECB is pushing very strongly, and you see that it seems inevitable that there will be digital euro, even though it's not completely clear yet what the digital euro entails. It does look like now there's some actual political pushback on the project, which has been, it's actually favored as well, because I think a lot of market participants and consumers still don't understand why we actually want a digital euro. It's not really clear which problem is being solved, and at the same time you see that the ECB still keeps on pushing for it. So probably the discussion will be a bit more balanced. I would doubt that it actually will get a real delay or postponed, because I think the forces behind it, especially from the ECB, are really, really strong. So I think they will keep on doing this experiment, which is really interesting as well, because potentially it could be a solution for I think the liquidity weakness that we've seen in the banking market at the beginning of the year, with Silicon Valley Bank falling over, basically based on a couple of social media posts about, hey, this might be not in order, I would take my money out if I were you. That basically could happen to any bank at the moment, and the current liquidity system is actually never going to cope with that, right? So that you could trick any bank basically if you want. And I think this is one of the things that's also behind this, that once you would actually have digital euros issued by the European Central Bank, it basically means there's a central guarantee scheme, and so you could, and basically they could print money at will, so there would never be liquidity crisis, no matter how many people would want to call for their money all of a sudden. Because there actually would be no difference between the actual money that there is and the money that the bank has to provide you if it's only digital. Right? So because currently a bank can actually give you an account but doesn't have to hold all that money. For example, that's what happened to Silicon Valley Bank. Just see some question marks overhead, so that's why I keep explaining. So basically what happened to Silicon Valley Bank is that they had only a cash reserve of, let's say, 10% of their balance sheet. And once that cash reserve was gone, they needed to sell off some of their longer assets. And these assets had gone down in value because of the rising interest rates. And that means they had to sell them at a loss, putting basically their company more at risk, putting worry into investors whether the company would actually sustain in the long run. And so that sort of triggered the whole basically creates a bit of a domino effect of people putting out their money, having them to sell more assets, making more losses, and basically going into a virtuous cycle that was bad for the company. But it could actually happen to any company because the general business model of a bank is to have long-term assets and short-term liabilities, right? Like the cash positions. And that is always a mismatch, but once everyone starts to call for their money, that just goes wrong. So that's why there's a liquidity requirement, but it's not made for 100% call on liquidity. And well. Yeah, there it is. All right, I just to speed up a little bit. I don't want to take too much time. Here we have the 4 largest funding rounds of the last month, with 370 million in Series D for Advanced Intelligence Group. Builder AI raised 231 million, Empower 140, and AFIG 130 in funding. Quite some serious funding rounds. Only the one in UK, Builder AI, is actually close by. The rest is US and Singapore. In the Dutch market, we also saw some nice funding rounds with TradeFabric raising Clearly and Equip. Quite nice to see actually also the funding landscape. So there was quite some worry about investments in fintech this year, since of course the conditions are less favorable. But we actually see that every month there's still funding coming about. So I think we're quite happy with how that's still progressing. Then I want to briefly dive into some of the topics of wealth tech. So I think global investment in wealth tech sparked also in 21. I think if you remember back from previous meetups if you were there, that all investments sparked in 21, but most of them declined again in 22. But mostly they were still on the rise compared to 20 figures. It was just that 21 was a funny spike actually in the whole investment landscape. But so wealth tech is also still doing actually quite well. Even though we see that the total wealth in 22 actually declined a little bit, especially due to more severe market conditions in both crypto as well as in regular capital markets. Mostly all based by rising interest rates or expectations of rising interest rates. So what do we see that as sort of biggest trends in the market? Well, on personal finance, I think over the past years we've mostly been talking about open banking and how much that was going to deliver all kinds of tools that would help people to manage their finances. Well, that promise really didn't deliver yet. I think actually what we saw with the largest personal finance apps were folded over the past years. It doesn't mean it will not happen, but we do see that mostly currently banks are actually offering their tools within an app, which are not really delivering a separate independent business model just yet. In any case, it has appeared to be quite a tough market. So that's especially on the personal finance part. If you talk about wealth tech, which is actually a bit more of a sort of overarching topic, we see that of course the market conditions with lower wealth also decrease the investments made here. And generally in wealth management overall you see an enormous consolidation power. So the biggest firms like Vanguard and BlackRock will only get bigger, and it's pretty hard to actually for small firms to compete against the rates that they can offer for trading. Of course, impact investments is very important these days. Everything needs to be ESG compliant from a regulatory perspective, but also customers increasingly really want to know what the impact is of the investments. And data is a really important part in that whole game. Everyone wants to know exactly what's the impact of the investments and can we actually become better at making investment decisions by using data. And this is also where AI plays an important role in the whole scheme. Well, for pensions, I think in general, it's of course basically investing for the long term, you could argue. But we see that especially since the population keeps on aging, there's a big drive towards pension system reforms, as we also see in the Dutch market. And that's really something that's being driven by the public discussion. So it's less of a technology game yet, because it's not an open market where everyone can tap into. But we see that especially there's a regulatory political drive to change that game. So there are a few things, quite some interesting reports I encountered, for example PwC, who said these are the 4 big drivers. It's a buyer's market, so it means that the prices have to go lower and lower. There's a lot of competition and consolidation because of that. Everyone needs to go digital, because if you work with old-fashioned processes, it will be too costly. You have to look at the future, which means looking at ESG especially, and for example resolving the aging problem, and actually looking at the outcomes rather than the promises, right? So I think we've seen, for example, a lot of green promises over the past years, and now actually we just want to see exactly what's going to happen instead of all these promises. What below I thought was from the environment report quite interesting, how the complexity of investments has raised over the past years, which is actually driving a need for technology to actually help them make their better investment decisions. And the final one, these are the biggest opportunities according to Accenture, where the biggest impact of technology might be had, whereas CRM plays a really important role, KYC, AML, and for example, cloud-based solutions or artificial intelligence play an important role in the whole adoption of technology to actually improve wealth management across the board. We'll in any case make these reports also available on our website in a summary quite soon, so you'll be able to actually download original reports to basically dive into this feature. That's it for my end, to actually just give you a bit of context of what we want to discuss today. Hope that was useful. Then I think it's time to actually get our first speaker ready. So, Wouter, if you're ready, you have the
Thank you again. Hello everyone, well thanks for having me here today. My name is Wouter van Reevoort. I'm an innovation coach at the Rabobank, and in that sense I will try to guide you through the question that I've written down in these slides. Maybe it's good to clarify that I mean traditional banks, so not the neobanks that Rolf mentioned before, but the Rabobank and the ING and Canada traditional banks. I have 8 minutes, I think, which is a challenge for me to try and push my whole story through, but I'll try. Before I talk a little bit about myself and the reason why I think this question is important, I would like to ask you what you think. So can I please have a show of hands if you do think that traditional banks have a future in the world of personal finance? Who thinks yes? That's a bit more than half, I think. And if I now ask, who thinks traditional banks do not have a future? Do I then see the other half? Yeah? No, almost. Okay. Well, that's good to see. I'll tell you a little bit more, before I answer the question myself, a little bit more about the reasons why I ask myself this question. It's twofold. First of all, professionally, I've been working in the financial services industry, traditional banks, for the last 9 years, of which the last 3 years were in corporate innovation. I did multiple things. I was a proposition lead for 2 years, and the last year I've been an innovation coach. That means that I help proposition teams with their more innovative propositions to try to get them to the market. So in that sense, I'm really actively trying to help the bank adapt to whatever we see happening in the market and to the future. But it's quite a struggle, I have to say. And it's not necessarily the people that work there. We have a lot of smart people that really get the pressure that is on at the moment. But it's really the fact that we are a traditional. I heard a quote here today that said, banks are technology museums. Yes, it's not necessarily untrue. So where we try quite a bit to change, it is slow and it takes a lot of effort to make changes. At the same time, you see that the industry, the financial services industry, changes more and more, faster and faster. We heard Rolf talk a little bit about regenerative AI as a disruptive technology. I think that can be a major game changer. I was very surprised when I learned yesterday that ABN AMRO actually does a pilot with ChatGPT in their contact center right now. I was quite impressed by that. At Rabobank, we struggle a lot. So for now, ChatGPT is off limits, and there is a specific group of people looking into whether or not the government will allow us to do something with it or not. in any sense, I think the focus from the regulator is a lot on traditional banks, especially on the client data privacy aspects. So I think we're also a little bit scared to really try new things and be exceptionally fresh in new technology. At the same time, we see that our clients, especially the younger generations, have top-notch experiences, UX-wise, user experience-wise, in different markets. So you have your Uber ecosystem, and you have your Netflix, and it becomes your standard, right? So you kind of expect everything in your life to be up to that level, and then your financial services provider is kind of a bit behind, I can say. So we have to try and get that up to speed. So it's important, and I'm working on it. So that's the one important part where I ask myself the question. The other one is that I'm a client myself, and this emoticon is a fair representation of my feeling when I think about my relation to the bank. The reason is that I don't really feel any connection. So yes, I have my bank card and I can do my payments, and I have the mortgage, and so the bare necessities I can do, but there's no connection, no engagement. It's something that I really miss, and I think it's vital for banks to create stickiness with their clientele. So, and it's missing right now. So that's, from a client perspective, I really think, something needs to happen. Huh? And if you look at the last 9 years of which I've been working in financial services, and then translate that to my personal life, a lot of things have happened. You can call the overall situation settling down, but settling down financially means turning your whole world upside down. Especially the last one. I got a baby boy 9 months ago, and that completely changed my priorities and my financial household. But yeah, I don't think any of my banks know this is going on, and I had no connection with them, no communication with them about it. So we could have done so much better as a bank to try and engage with me as a client more. That's something that I think is really important. If you look at the question that is on top of the slide right now, I think this question is vital to try and answer first. What will personal finance look like in 3, 5, 10 years? I think two things are very important. I think partnership and ecosystem building, it's not a new thing. We see it happening a lot already in different markets, quite successfully. For example, these two, I don't think any of them need further explanations. I learned yesterday that Uber Eats at this moment has a bigger turnover than the original Uber, which I thought was very interesting. But creating partnerships and ecosystems is not always necessarily a good idea. So you can also look at this example. I'm not sure if everybody knows, but Haven Health Insurance was a cooperation between Amazon, JP Morgan, and Berkshire Hathaway. They, in 2019, thought, let's change the US health insurance environment, which I think is one of the most political and lobbyist-driven environments you can be in America. So 1.5 years and 100 million later, they decided this battle we cannot win. So it stopped again. So it's not necessarily always a good idea. You really have to think about, okay, what are we going to achieve with this partnership? Which market, why are we unique, and what can we actually bring to the table in terms of value? If you translate that to personal finance, I think the USP of traditional banks at this moment still is the amount of client data that we have. We can really try and leverage that, but we struggle a lot with the state-of-the-art technology. For a long time we tried to do everything in-house, not very successful. over the last couple of years, we more and more see the light in terms of trying to partner with startups, scale-ups, fintech, and that is to some extent becoming more successful, but it's still a struggle and a long way to go. But I think this is the way to go if you want to create winning propositions for your clients. And if you now look at personal finance and wealth management, I think it's especially around using the data and advanced data analytic techniques and combine that with behavioral science. Rolf, you mentioned that the PFM tools that are being adopted more and more are not necessarily always successful, and I believe that is the case because it's a product push approach. A bank adopts a certain technology or functionality, puts it in the market and says, okay client, we now have this, good luck. And clients think, yeah, it's not always necessarily helpful or interesting or maybe fun for a short while, but there's very little engagement towards really connecting with your client and making sure that they get the best value of every functionality that you offer. It is something that we try to set up at the Rabobank currently. It's a project where I'm involved as a coach, where we connect with multiple startups to create an enhanced wealth management client journey, especially for the younger crowd and women, I have to say. And the idea is that throughout your life, basically, so we engage with you on a bit younger age, and we kind of guide you through the steps that I showed on the first slide, my personal story, that any transition that you make, any big change that happens in your life, that as a bank you then are there to help and guide and coach and make sure. I'm already out of time. I didn't need to see the thing. Sorry. I'll try to speed up. Conclusion, do I think that the traditional banks have a future in the world of personal finance? I definitely think so, but there's quite a long way to go still. But this is me going to work every day, so I'm excited. I think we can pull it off. Yeah, if you guys want to talk a bit further on the rooftop after today, then I'm happy to do so. Thank you for your time.
Cool. Thank you. Let me start with giving you a big hand. Let's
Thank you. I need the or are you going to? Here it is. So I'll first do a brief introduction about myself. When I saw down slides, I should have said CEO, but I don't like three-letter job titles, so I call myself managing director. When I saw Wouter's slides, I feel like a dinosaur. I'm in the financial industry for almost 25 years now. Bit of background. Started at Bing Bank, doesn't exist anymore. Went into Saxo Bank. Went into the management team there when it was a listed bank at age 27. And then I thought, together with two other colleagues who were also in the management team, we're not going to be management or board of a big bank at this age. Big Bank was back then already listed also, so there was only one thing that we could do was to start our own company, which was called Open. Some of you might know it's a core banking company. Long history with AWS as well, because we're actually the first company, together with our launching client, which was Robico back then, which was still a bank, to launch the production environment of a bank in the cloud. It was the first globally. Took us 2 years. 253 calls with AWS lawyers on one side and the Dutch Central Bank on the other side. But still, if you're a financial institute and you get your contract with AWS, you get a special annex for financial companies, which was negotiated in those 253 calls back then. So we started in 2009. I left 3 years ago to embark on a new adventure. So that's a bit of my background. Let's get started. Actually, I gave a short thought to throw the entire presentation away after I heard what Don was telling today, and especially also Wouter. But I'll get back to it a bit, but later on you understand why. So, I think there are A few things interesting here. It's our payoff, monetize, engage. We're all after the word engagement, and I'll get back to monetization as well. We are a personal finance company. We are a B2B company where we provide personal finance services through an API platform. That's basically what Fintech is. We do all personal finance services except for the things that are regulated, because I come from a regulated environment for 25 years almost. My partners come from regulated environments, and we were kind of fed up with regulators. So we started this company. So I wanted to talk to you today about the challenges that I think every tech company currently actually is facing, and that's a bit the state of the market. So if you look at the past few years, I think talent, specifically engineering talent, software engineering, is scarce and very, very expensive. I think it's almost impossible if you're not a sponsored ING reference, ING, it's almost impossible to get talent in Holland at a normal cost. So I think everyone here knows you have sourcing challenges. You have a lot of plans, a lot of ideas, large roadmap, but not enough talent and people to actually execute it. However, capital was never a problem up until, let's say, I think the market pivoted started pivoting about a year ago, really pivoted about 9 months ago. So there are still tech companies who had their funding in, so the talent is there, the innovation is there, so the pace of innovation is still very high, although actually the market is pivoting. So there are challenges. Third thing here is that I mentioned just now, the market is pivoting, where actually, although there are obviously exceptions, but what we also see, we're also kind of in a private equity kind of setup, is that the valuation of companies now, where multiples on EBIT or even multiples on top line revenue, not even gross profit, but top line revenue multiples, now it has really changed to discounted cash flow valuation. That's basically, if you're not making money, your company is worth nothing, valuation is low, not capital coming in steady. You need to make money now, whereas you could get investors on board 2 years ago just on promise. Again, there are exceptions. And what we see if we talk to companies around us is that the investments that those companies are making is not about big ideas, and they're also told about future promises, or it was done, I think. No, it's about results. You need to get your results in. And results, your investments can actually do two things, either create revenue or decrease cost. That's it. So that's what we now see in the market going on everywhere. So what does it mean? What does it mean for tech companies, and I think also companies more in general? It's an IT thing, so you will use your own scarce resources to focus on your core activity. Could be anything, but only on your core activity. So if there are services or other things you want to provide for your clients, which are not your core activity, outsource it, buy it, outsource it, whatever. For example, Revolut, the crypto brokers, whole brokerage, they didn't build it themselves. They just bought a plug-and-play API, put it in there, clients happy, Revolut happy, because their competence, key competence, is banking. Well, payments actually, not really banking, but let's not go into that. And actually, what we also see is that if you look at these big companies, I think Crypto.com is also a nice one to look at, is that the availability of these platforms will enable those companies to create additional revenue streams for additional services they could offer their clients without actually putting their core staff on developing this. And actually, that is very easy because it's a one-time integration with an API or a platform or an SDK or whatever you use, one-time effort versus recurring revenue. So that's also very interesting. And I think also what we see is, and it's undervalued, is retention. So if you look at retention, or actually the lack of retention, to put it otherwise, if you look at these big neobanks, for example, we have looked at it many times, but N26 was also one. Actually, the drop-off of their clients is about 40% per year. Can you imagine the cost of acquiring those number of clients through your marketing budgets to acquire those vast numbers of users just to maintain your core base, not even growing, at a CPA for N26 or level of let's say 120, 150, 160 euros. It's unimaginable the cost. So retention is way cheaper. So retain your clients by actually adding, sorry?
Yeah, I was asking which company that was.
It was N26. I actually sat next to a board member, a former board member, and neobanks. But N26 was 40%. And the additional value of these third-party services that the cost is predictable. So either it scales with your volume, or it's a one-time effort, or it's a license fee. It is very predictable, the cost. So that's actually what we think, or what I think you should do, always do, is focus on your core competence. All the other stuff, what you need to do, buy it, or rent it, or whatever, but don't build it yourself. So I'll do a company presentation today. So this all leads to something, of course. What do we do at Fintech? We provide a white label B2B API platform in a few areas, which I already heard today. So we provide open banking, PSD2, categorization, but you could also call it data enrichment, merchant recognition, all that kind of stuff. We offer that in a white label solution. Where you can enrich all data. We can also enrich data as a service. If you have your own data, we could enrich it for you, send it back. That's what we do. We are in the subscription management business. I just call it a cancellation, so subscription recognition. Just one click of a button, for example, your Rabobank app, you see, for example, basic fit and whatever you think. I'm not going anyway, because the better way to do it, to click done. It's that easy. Also working now on renegotiation. Bill Shark, maybe some of you know it in the US, very large company. I think the third one is the most interesting one, rewards. So based on your purchase, you can get rewards, and it could be based on online behavior, or it could be based on your debit card. You just link your bank account, you recognize those transactions, you have deal with certain merchants, you can use it for loyalty programs, you can get actually a reward for using that service. And what we're now working on, which will come soon, but I already put it here, is investments as a service. So very simple proposition. My partners are also former founders of a very large brokerage firm. We don't want to get into derivative margin trading and all that kind of stuff, but very simple, plug and play, buying, selling stocks at the global exchanges. That's it. Very simple, but another way to retain your clients, to get them more active in your environment, because, hey, having a stock in your environment or your portfolio is actually free content, because it moves every second, so it's free content. So that's what we are. And of course, it becomes very interesting if you combine those two. But I'll get back to that later. So what do we do? So give you some examples of what it would look like. I think what is very interesting is actually what Don said about PSD2 and what Wouter said about PSD2. Because Don said, and I see that also in the market, that it's very difficult to monetize on open banking. We see a lot of PFM apps actually not generating revenue, putting a lot of effort in there. So it's difficult for those kind of companies. On the other hand, Wouter say, well, traditional banks, well, one of their key points is they have vast amounts of data which they could monetize on. So hey, let's connect Don and Wouter together. So open banking would allow you to actually get your hands on, sounds a bit negative, but to get large amounts of data. But PSD2 itself is a mean, it's not a goal. So you should think about how you could monetize on the data. I think it's very, in a way that it is implemented now in a lot of cases, the monetization bit is overseen. So how could you use it? For example, for a, let's say, a shop like the Hypotheker who sells mortgages. We know that it's a regulated business, so you need to put in all the paperwork for the actual filing and the actual applying for your mortgage. However, to get an indication of what you could loan, just connect your bank account, you do a one-time check, boom, you got all the data of the client in. You disconnect the account, you can say with 99% accuracy rate, this is what you can loan, because you know the entire spending, assets, everything of this client. It's very easy. Same goes for buy now, pay later companies. How much how much credit are you going to give someone? Very easy, connect your bank account, do one call, analyze the data, you're done. Very easy, very cost effective. It could also be for insurances. How do you calculate if you do dynamic pricing in your policies, for example? Are there any red flags you don't want to see for a customer? For example, gambling, someone who pays a casino every week with large money. You don't want to see it. So it's about optimization there. And again, data-driven propositions. You could very well think of, let's say, loyalty programs. But then you could target specific client groups. So, for example, if you have all the data in your proposition, you could reward, let's say, progressively. You could reward rebate. You can do all kinds of things about what data. Actually, getting your hands on data, which Wouter says, the big banks is the biggest asset they have. They are way stricter in their policies, so it's very difficult for them to get these provisions out. You can have the same data, but not the burden of a operational risk manager, a compliance manager, a legal manager, and all that kind of people. Let's look at subscription management. It could also create revenue. Actually, did you know that many organizations are actually paying you to send their cancellation to them? Because that cancellation is routed to a retention desk. And there again, let's say the Vliegloterij, big lottery companies in the Netherlands, are actually paying companies to get the cancellation end up at the retention desk instead of in the PO box, because then they have a chance to retain the client. So it's very cheaper for them to retain the client than just process, and they're actually willing to pay for that flow of cancellations. So you can monetize on that. It could be a revenue model, of course. And what you could also do is, if you have insights in all these subscriptions and you cancel a few, you would have, for example, you could generate cash for a specific client, which he could or she could invest in other products or services that you offer. It's very interesting. Rewards, well, very difficult. It is very easy. It's loyalty. Get personalized rewards when you bank at Rabobank. Very nice. Rabobank, very large bank. A lot of customers can get great deals with HEMA or Walker or whatever, get personalized deals. But it could also be a revenue model where you just get those deals in, you top off a bit of the revenue, of the reward for the client, and you create a revenue stream for yourself. Same goes for investments in the end. It could be a loyalty model, just having your client in, retention model, keeping them interested, creating content, or it could be a revenue model where you would charge, let's say, €1 for a trade, and you top off 50 cents on top of it. Everything you could think about there. For example, if you're a big company like, we are now talking to very few big listed companies where actually clients are rewarded by getting actual stocks in the company. For example, Procter & Gamble, when you buy a lot of toothpaste from them, you get actually stock from them as a reward. Those kind of property, but it's all about getting costs down and creating revenue streams. So, who are we? Very quick. We were founded by a few entrepreneurs in June 21, so that's 2 years ago. We went live with our launching customer 6 months later in France, Italy, and Spain, with these services, except for investments, of course. In June last year, we launched in the Netherlands, Germany, Belgium, and Ireland. I did the count for this presentation, but in May we had about 25 B2B clients and a total headcount in our organization of 180 FTE, 180. And we're going to launch the investment proposition somewhere end of Q3, early Q4, and more to come. So that's a bit who we are and where we're going to.
Great, thank you, Erik. Well done.
Right. Thanks, Don and Rolf, for inviting me. This is my first physical Holland Fintech event and already on stage. I did present during Corona once, I think. I saw in my Dropbox folder, I forgot. But yeah, great to be here and great talks already. I think we are doing a little bit like what Erik was describing, plugging in embedded fintech. I'm also on trend, and we started as PFM at Flow, and now we're embedding this into banks. So I think Wouter needs us in his slide on the right. But yeah, I'm here to talk about Flow. I'm one of the founders and CEO of Flow. We're a money automation platform that helps people automate their financial lives. But before I talk about Flow, I want to go one step back to my past at ING. I have a product background and I helped a lot of companies launch new products and relaunch products. One of the products me and my other founder Niels worked on was Jolt, was the PFM proposition from ING in the days where scraping was still allowed, and also then during the launch of open banking. We were actually the whole product team from 0 to 300,000 customers, and with this product we could connect to the customers' bank accounts in the UK and automatically give them an overview of this is what you spend your money on, and these are tips and tricks on how to improve your financial well-being. People loved it, they loved the brand, they loved the app, and they found it amazing. But we had actually one big problem, and that was a problem that a lot of BFM apps also had actually later. That was retention. So after 3 months, most people did not open the app anymore. We were flabbergasted. Back then we thought, why? Such a great app. We researched and we found out it's a very simple reason behind it. It's actually a bit confronting to look at your own bad money behavior all the time, like a weighing scale you don't want to stand on. So people just did not want to see that, that they did it wrong again. So they just kept the app in the pockets. So we thought, that's a bit hard. We want to help people, they want to be helped, but it's their own willpower that's in the way. They just cannot help themselves, even if they get the tips. So we thought we have to do that completely different. We actually have to help people move the money around to the places they would like it to go. So a lot of people know I've got a salary, I want to pay my bills, I want to spend less on certain budgets, maybe stop some subscriptions. I want to save and I want to invest right away, but they just don't do it. And this system was actually already around before fintech. This is what our grandparents used, just a tin can and to put the coins in once you get it, and if you spend from the jars, that's good feedback. And we translated this into the 21st century with Flow. So we actually connect to bank accounts and we automate this behavior for customers. So you can set up what should happen when my salary comes in or my freelance invoice. And actually we use the banking data like Eric described with consent of the customer. That's of course important. And then we can just look at anything, child benefits, salaries, all kinds of scenarios, and then move that around for customers. We are a regulated company, so we have our own PC2 licenses, AWS and PIS, and that's actually what we use proactively to look at the data all the time. We've got a lot of customers like Wouter who have 2 banks at the same time, and they have different relationships with them. We actually facilitate the automatic movement of their salary from a traditional bank to a digital bank, because people have their mortgage at their traditional bank. They have to get salary there to get the discount. Well, also want to pay some bills over there, but they want to do budgeting, saving, fun stuff at the digital banks. And we actually transfer on average 708 euros per salary to neobanks, which they love. And we also connect to other places where people want to bring their money towards, like investment accounts in crypto, etc. We started as a B2C company, and we are not anymore, but we still have our proposition live in the Dutch market. It's a Flow app. It works like this: you connect your bank accounts, multiple if you have them. We don't have our own bank accounts, and then you use those different IBANs or savings accounts for different purposes, and then you automate in a sort of no-code way what should happen when my money comes in. We're the most, we're a front runner in this segment, so we go really far in the building blocks we offer, so you can create sort of waterfalls of your money that can sweep your accounts empty, etc., etc. We actually brought it to the mainstream audience together with influencers, writers of bestseller books, collaborations with well-known brands and investment platforms to make sort of money methods that suit anyone's lifestyle. So for a freelancer with a certain revenue level or family with kids like Wouter, you can choose like a little bit like eToro. This is a system I want to use, tweak it, and then we just do it. And these are some insights of our own B2C platform. We manage almost more than 175 million annual income, and we distribute that actively towards those top 3 destinations. So most people use it for spending budgets, and then savings, and then investing. We actually see great retention compared to Yolt, and how long people leave this on and let us actually distribute their money. And this is, zooming out, this is of course helping the customers. The willpower is replaced by automation. But it's also good for businesses like neobanks, for example, because we bring actually money to places and we start bringing more money to places that you can make money on. More card payments, more savings, more investments. And that's actually, we're influencing the money behavior of customers like that. And that's also, we actually could not reach our full potential with our own PC2 platform. One, because people just like to have this in their own bank, or they wanted us to become a bank. So we did investigate this together with VCs, we just did not want to get the business model of a bank with it. So it just makes the most sense to integrate this in the place that you trust and have your other financial products. And that's actually what we do right now. We integrate this into banks, financial institutions, but also into non-financial institutions together with banking as a service partners. We build up this system of multiple IBANs, cards, including our money automation technology. And this is an example of how that could look like. It's part white label, the front end, but also we integrate on top of the internal APIs of the banks. And at the same time, we also bring the power of PC2 to bring in, for example, salaries from other banks into neobanks. And then we can actually drive more money towards internal money destinations, which is of course great to have active customers. It's very sticky, because once you have this system running, then you don't want to go back anymore to the manual days. So if you are a bank, Wouter, that is looking for this, or know a bank, then let me know. Cool, 0 seconds left, so.
Yeah, thanks, Daan.